Today's episode of Market Talk is brought to you by GrowMark FS. Keeping up on the latest in ag is a challenge, to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic, grain, and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. Well, as we take a look at Wednesday's market action, was wheat, was it a product being oversold? We saw a bounce there. Soybeans, meal continuing their rise with some late buying, and corn market not really doing a whole lot, but in positive territory overall. Pretty decent day in the grain trade. Livestock as well was kind of mixed, but we have plenty to discuss. Let's bring in our good friend Mike Zuzolo, Global Commodity Analytics, joining us today. Mike, good to catch up with you again, sir, and hope your week is off to a good start so far.
Well, it started off pretty rough, Jesse, but Wednesday did a lot to heal it up quite a bit. So let's keep it running all the way through USDA's crop report at the end of the week.
Definitely. I agree with you, and I know we will discuss that crop report here in a little bit, I'm sure. Let's just talk big picture here. A decent rally day in grains on Wednesday, as I mentioned. As you take a look at things, one of the charts I'm going to pull up on the video feed right away, looking at the dollar index and a little bit more here. Walk me through what you saw on Wednesday and what you're seeing big picture right now, Mike.
Well, a lot of the things that you and I talk about in the visuals that we look at are proprietary charts that I've created over the years. And this is one of my favorites because it really does show a nice opposite price action and trend with the US dollar index against the Deutsche Bank agriculture commodity index. And what's really special about this chart to me is how the markets were in complete opposite formation going into the 2008 financial crisis, where the Deutsche Bank Agriculture Commodity Index was making a historic high and the dollar was making a multi-year low at the exact same time. And then the crash came and everything readjusted. And you notice as we got to 2014, those two lines crossed. The dollar index went on higher, gapped, not gapped, but went to a whole nother level higher. And at the same time, the Deutsche Bank Agriculture Commodity Index went to a whole nother level lower. And we've been fighting that all the way going into 2020. And we had another similar situation where, with the help of the Federal Reserve and the strength of the Chinese commodity buying because of the phase one trade deal, we saw a real push in the commodity index in purple, while the dollar wanted to go ahead and go on lower. But notice the dollar didn't go lower by much, and all of a sudden it changed trend. And that stopped the Deutsche Bank Agriculture Commodity Index in its tracks, Jesse. And what I like about this chart is the fact that, really, you and I have talked about this. If you want a commodity index buy, if you want the investors to come in, you really need to see the two major features fundamentally change, and that is the Federal Reserve hiking interest rates so aggressively, and that's what this chart really shows you. And also the COVID policy of China, that zero COVID lockdown. That's the other thing this chart really shows you in the dollar. And we're really on kind of a knife's edge now, because this agriculture index in purple is getting really close to the 2021 highs, and we're kind of eating into our support levels. And so we need this break in the dollar. And what we've seen in the last 60 days from low to high is the Hong Kong equity market jump 35%. The bonds in the 10-year here in this country jump about 6%, and the copper jump about 20%. All that has helped push this dollar index that you see in orange down about 9.5%. And so between the Chinese releasing their COVID strategy just in the overnight markets and really wiping clean a lot of their stringent policies, and the fact that we've got the Federal Reserve coming up next week, I think we really are at a watershed moment. And while that demand low I've been talking about in the wheat and the corn has really not appeared at all since we talked about it back at the NAFB meeting about 3 weeks ago, I still feel as though this market is set up and primed for a change and a shift back towards a more supportive market. But time is of the essence looking at this chart.
Very much so. Time is of the essence. And, you know, we talked about the demand low in wheat and corn. And I wondered with wheat, you know, where would we stop necessarily here? Looks like, you know, some folks feel like the wheat market got oversold, Mike, and that might have been part of the quote unquote technical bounce on the day Wednesday. What's your thoughts there before we jump into that soy market?
It was a heavier volume day than what I would have expected. It was a better price action day than what I would have expected. And that gives me a feeling that we may be trying to put a low in place. And I say that from a standpoint that about a dollar and a half ago in price action, I was talking to you about the market needing to go about $1 to $1.50 higher. So I'm down to almost $2.25 on the hard red wheat price from what my overvalue level says it should be, Jesse. We still have a 15-year low in the world wheat ending stocks. That's not gone away. We still have a worsening drought in Argentina's wheat belt and their harvesting. That's not going away. And we still have a worsening drought in the U.S. hard red wheat belt, and that's not going away. What I think this changed this market dynamic has first been Russia throwing extra bushels onto the market about a month ago. The trade thinking that that was just Russian bushels. I think it's mixed in and blended with Ukrainian bushels. And then just this week, Australia came in and said, yeah, we had historic floods. And people in Victoria and New South Wales who were saying the situation was dire in wheat country, and that was their talk. The roads were being washed out, bins were being swept away, grain bins, that is. And yet Australia Bears came out and said, we're going to hit another record, a second record in a row in 2 years in our wheat production. And so I think the market is really wondering whether this is just a dead cat bounce before we get to the crop report. I'm wondering the same thing too. But volume means a lot, because if you get a big move up on volume led by the European markets like we saw today, that could change some of these sentiment indices. And the algo traders really trade a lot of sentiment and momentum specifically, and that's what I'm watching for.
I'm going to come back to corn. I want to talk soybeans first and the soy complex, because then I think we could tie in a little bit of corn discussion with both that and wheat as well. Soybean meal, I mean, just off to the races. We saw the bean oil collapse last week, and now we're seeing that spread kind of widen back out between meal and oil. And I thought late in the day on Wednesday, I was thinking, oh, a decent little gain, but then we found some late buying. So walk me through what you see in this soybean meal market right now. I know there's a lot of factors there, Mike.
Yeah, it makes sense that soybeans by themselves would want to find some support off of the renewed Chinese buying and these COVID lockdown being pushed away. These new requirements and the old requirements being pushed away and fallen back into more of a normal mindset in their living in China. But what really strikes me in this market is the meal market. That's the one that is kind of the backbone, because it's the feeding demand. It's the one that typically brings trends to the soybean market, as opposed to the bean oil, which the market gives and the market takes away very, very rapidly. And what you see in this this weekly chart, is that we've taken out both the 26-week and the 200-week moving averages. We haven't been able to do that since back when we went below it back in August, September time period. And with this weekly breakout of that wedge formation in blue, we now have a breakout on the monthly chart, Jesse, and there's really very little resistance until you get up to around 470, 472. So that's one thing, is just the breakout and the way this chart looks. It's a very healthy looking chart. But what would explain this fundamentally? And really, to me, there's only one factor out there. When you have record bird flu, when you have a pretty decent sized crop being grown in Brazil, you have a questionable Chinese hog market and hog inventory situation, what would be out there fundamentally to justify this? And I think it really boils down to the drought in Argentina, because typically Argentina is the number one or number two soy meal exporter in the world year in and year out. I think that might be at play here. The trade has decided to trade the drought in Argentina through the meal instead of through the wheat at this point.
Talk to me about the global soy price picture here as well, because I mean, we got to think about this globally, Mike. South American weather, you brought that up, and then obviously with everything with China right now. Walk me through this chart as well. I know we got a couple different prices we're looking at here: Brazil, Argentina, and the U.S. Gulf.
Yeah, the neatest thing about this chart is that it does support the idea that Argentina is the driver on the soybeans right now, Jesse, because if anything, Brazil's lost a lot of premium in Paranagua. Even with their road problems, even with their mudslide, we still have gotten down to about 560 bucks a ton, and we're starting to inch back up. But notice what that green line has done. That's that Argentine price. It has gained around $30 a ton, plus or minus, and I think that is the heart and soul of why the meal market is doing what it's doing. And this goes back to that Argentine soy dollar. I think we're at a level now in Brazil and especially in Argentina, and we may have talked about this last week, where that soy dollar looks awful appealing to go ahead as an Argentine farmer to sell bushels. But if you've got a record drought on your hands and you're right at the critical phase of making your new crop production, you're going to hold on to whatever old crop production you have, pretty much regardless of the incentives that you have that the government's throwing at you. And that's universal, whether it's the United States or Europe or China or Brazil or Argentina. The farmer holding is kind of universal. And I think that's really what has brought about this move to the upside. Now, that's the good news. The negative news is, notice where that purple line is, the Gulf price in the United States, at just under $590 a ton, well underneath Argentina, but well above Brazil. So this chart says to me, A, we need to continue to see a drought in South America, and most importantly, B, we still need the wheat and corn to underpin us in the soy complex, and that currency market to underpin us kind of simultaneously in the Brazilian currency specifically, if we want those soybean prices to go on higher after USDA's report. So to me, you almost have to feed the bull in the soy complex after the report, and you have to feed the bear in the wheat complex because of the break we've had. We've gone down to October of last year's prices in wheat. We're now only about $10 a ton more expensive than some of the key Russian exportable stocks out of the Azov Sea.
Well, Mike, I want to continue from there. Before we talk the report on Friday, this corn market to me just feels like a dog right now. And I know we've talked about this, Mike. It just, even a big up move in wheat and soybeans on Wednesday, corn just says, I'm going to stay in my trading range. It still feels like this corn market largely is a follower, and it's probably going to be a follower for some time.
I think until Friday it will be. I think USDA's report really has kind of put the handcuffs on the corn. The spreading has too, Jesse. I mean, I think this is where the trade almost always feels more comfortable buying the beans and selling the corn before a USDA report. We've seen that wheat corn spread collapse to about 80, 85 cents on soft red wheat minus corn. So just natural back and filling of re-owning the wheat and selling out of the corn on a spread is probably taking place right now. I do think that the report is probably most important for the wheat market when it comes to putting a low in. And if we can get a low in the wheat and we get a sharp enough rally in the wheat, then the corn becomes something that is supported again and can follow to a degree. But we still have a lot of fund length in that corn market as well on managed money. So I do think that it's still a follower. Now, having said that, Argentina is a major corn producer in this world. And I think between its crop and what has happened in France, the corn probably still has the least amount of downside unless the wheat breaks into new low territory and pulls the corn down with it. And that has happened in the past. After the 08 market and after the 2012 market, the wheat market broke, and then about a month after that, the corn market broke really hard. So we really do have to be careful about what the corn market's going to do here.
Well, Mike, with that report coming up on Friday, typically USDA doesn't make a lot of changes in the December report. Historically, it's holiday season and they just kick the can until January. I kind of got this gut feeling that we could see the old, what's S and USDA stand for, surprise sometimes. I feel like we could see a surprise, and I think you're kind of maybe alluding to that as well, Mike.
I was just going to say, excuse me for interrupting. I do think you're right about that. I think that the USDA this year overall, Jesse, has been very quick to make changes instead of waiting for January. And we've had several surprises, whether it's the spring or the summer or the fall. And I'm kind of dialed into more surprises than not, mainly because of what I talked about a minute ago about how much overdone to the downside the wheat has become and gone down, and what we've been able to do in the beans and get back up to multi-month highs or close to multi-month highs in some cases, even though we've got a brand new crop coming out of South America. This trade is getting more and more inefficient, I think, in between USDA reports, and therefore it creates more volatility and price swings. So even a USDA number that may be normal in most months and may not move the market that much in most months, the trade nowadays seems like it's ready to move very aggressively one way or the other after those numbers come out.
Mike, I don't want to shortchange livestock. Let's jump in. Cattle and hogs had a rough day Tuesday. Wednesday came back and at least maybe held a little bit. But you look at this cattle market first, and I know we've seen a big drop in cutouts on the choice side, especially. You take a look at this cattle complex as a whole here this week. What stands out to you?
Well, the neatest thing about this chart, I think, Jesse, is that we have a pretty strong cycle. And, I have to say, from a compliance standpoint, cycles are not something you can rely upon because they're backward looking. But I still appreciate them because of the animal production cycle that we have in the livestock. And so I still look at cycles very frequently in the cattle and hogs, and they help me make my recommendations and determination. And what you see in this chart are some blue bulls down at the bottom. About every 4 years, you see a major low in this market. And you could shrink this chart up and take it all the way back to 2006, 2007, and see another blue bull about 4 or 5 years back from 2013. And I think this is where the market would suggest to me that with that last low off of the pandemic in 2020, we're really getting long in the tooth for 2.5 to 3 years higher and then 2.5 to 3 years lower. And I think that's where this purple line that we're testing now with that low in November of 150.98 in fat cattle, that's a really big line in the sand for me, because if we take out November's low, then all of a sudden we'll take out that purple line, and that could bring us into a sell signal looking at both the cycles and the technicals. Why would that be? Well, it's not hard to envision if the feeder cattle market can't rally anymore and the hog market can't rally anymore, that the packers this time of year, especially if they're bleeding red on their margins, will try and back up cattle and try and weaken the prices in the cash market. And so we're in a very delicate time period. You and I've talked a lot about this. I think last week I was talking about watching the next 10 to 15 days in the cattle market to get some hedges for the first quarter in place. I'm still right there.
Well, and thinking about cattle and hogs as well, Mike, I wonder, have we gotten past some of that holiday seasonal already? I know, we still got a couple weeks till Christmas, but Thanksgiving's gone by. Are we kind of past some of that window of people filled up their freezers already, getting prepared for Christmas dinners and New Year's or not? So I wonder what some of that domestic demand could do to this market as well. I feel like seasonally, this is that time of year where we kind of get a bit of a slowdown into the new year.
It is. And I think you have a really smart mindset about what you're talking about, Jesse. And I think that's where, as you get into the Christmas and New Year holiday, and you get ramped up for the Chinese holiday in February, I think you really do need more exports on the books. And that's where the domestic market could find a lot more supplies that they weren't used to seeing if we see our export market slow down. And so that's where the currencies and this COVID restriction policy being lifted is a real big feature. Now, what that means to me is that you really want to see a recovery in the hog sector, especially the front end market, because the pork cutout has weakened. That suggests your holiday seasonal is peaking, and it also suggests that you are going to have some extra supplies as a result of that. So you really need some help in the front end, and nothing does that better than either a disease or the exports. And let's obviously hope for exports. We don't want ranchers and we don't want poultry and hog producers to have to go through a disease problem.
We definitely do not. Final thoughts, Mike, before we wrap it up here today?
I told clients late last week and early this week that I really do think the fundamentals are still pretty sound for a demand low, Jesse, but I can't fight City Hall, so to speak. If I lose a lot of ground here after the USDA and after the Federal Reserve speaks, and I don't get that turn because of the COVID policy being loosened, and with the Federal Reserve loosens up on their strict movement, those are the two major reasons that I could see a demand low coming. And I'll just have to look myself in the mirror and say, it didn't happen. So what are you going to do now? First thing to do, I think, is expect the beans and the corn to do what the wheat did this past month and get defensive.
Well, Mike, if folks want to reach out to you and see your analysis and talk with you, what's the best way to reach you?
I hope they do, because the next 30 days between the South American weather and what you and I have talked about today, I think you could really maybe pick up a lot of valuable information that hopefully would help your farm or ranch. So go to globalcomresearch.com, sign up for a trial, download our product services, and see if there's not something there that we can help you with.
Globalcom Research, com with two M's, globalcomresearch.com. I say it every time. I learn something new every time we talk. Mike Zuzolo, Global Commodity Analytics. Always a pleasure, sir. Have a great week. We'll talk to you again next week.
You bring it out of me, Jesse. You do a great job, and thank you.
That's going to do it for Market Talk today. Find us online, markettalkag.com. I'm Jesse Allen. Have a great afternoon.